All right, welcome back. Let's talk about our calls of the day. Evercore has taken down the price targets of a couple of private equity names. Blackstone to 180 from 197. They're still outperform on the name. They just reduce their enthusiasm, I guess. Apollo goes to 145 from 160, also outperform. So they clearly like the stocks. Blackstone, by the way, reports tomorrow morning, Surratt, before the bell. What do you think here?
Look, I like these companies for the long term. Apollo, Blackstone, KKR, they're all in the alternative space, which we know is getting more and more shelf space as more advisors put their investors into their products. And it doesn't have to be private equity. It could be real estate. It could be a whole bunch of other things. And I think
like private credit, maybe.
Well, that's part of it. But remember, we went through real estate.
Funny how you didn't mention that.
Well, we went through real estate with BREIT also and Blackstone bound. So, yes, private credit is a big part of all these guys, too. But I do think fundamentally long-term, as 401ks get alternatives, globally we get more alternatives, Blackstone is the leader in this space. And I think all of them are going to do well. In the short term, probably get some bumpiness. I mean, the stock hasn't done well year to date, 1 month, 3 months, 6 months. But I think fundamentally you want to be in the space.
Joe?
I think they're getting oversold. I think clearly the mood has soured, in particular for the financial sector itself. Keep in mind, in the month of October, while we have this shift towards quality, healthcare is up 5%. Financials are down 2%. They're the worst performing sector so far month to date. I think the private equity space has been somewhat oversold. And also, I think we've taken to the extreme the concerns surrounding private credit and specifically applying it to these individual names. Right. We own Apollo. I also like Carlyle. Also, I will share that in the last week, we've probably had 3 meetings about private infrastructure. I don't know if you're seeing that. You see more of that world than I do. But it seems as though the new quote-unquote alternative is let's go to private infrastructure because the government and the municipalities don't have the money. The private sector does. Let's make the investment there. Let's get the retail community in it as well.
And BlackRock bought a big global infrastructure a few months ago as well.
Infrastructure partners.
Yeah, so they're all in there.
They all have their hand in that.
They do, and the money gets allocated where there's more demand, and they make a lot of money on this.
Here's the issue. There are a couple issues. Number one, the mid-tier private equity firms. That's gotten so competitive. I just heard of a situation on an auction. So an investment bank runs an auction style company. There were 36 bids in the first round. You've never seen that. Now, as far as you go with the big firms like Apollo and KKR, I think they're going to do well over time. But right now, think of how many industries you've seen where there are IPOs over the last year, particularly this year. They're pretty much all technology. So the old line companies, the manufacturing companies that these private equity firms typically own, we still haven't seen the IPO market open for those. And that's going to be a big test.
These stocks have had a nice rebound this week. Remember, it's only Wednesday, okay? Apollo's up 3.5% almost. Ares is up near 5. Blue Owl is up more than 5. That's week to date, obviously. Maybe some soothing, if you want to use that word, from some like David Solomon was on Squawk yesterday morning. And I think the prevailing thought from those who are speaking out on it of that stature continue to be idiosyncratic, not something of greater concern, and maybe that's helped these stocks have a little bit of a rebound this week.